Welcome to Smart Stock Watch. Today is November 7th, 2024, and we're diving into the latest earnings report from Warner Bros. Discovery. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Warner Bros. Discovery has just released their Q3 2024 earnings, and there's a lot to unpack, from revenue figures to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Warner Bros. Discovery reported total revenues of $9.6 billion for Q3 2024, which is a 3% decrease compared to the prior year quarter. John, can you elaborate on these figures?
Absolutely. The revenue decline is primarily due to a decrease in content and distribution revenues. However, the company managed to achieve a net income of $0.1 billion, despite significant acquisition-related amortization and restructuring expenses. Adjusted EBITDA also saw a decrease of 18% to $2.4 billion, reflecting the challenging environment.
And what about their cash flow situation?
Warner Bros. Discovery generated $0.6 billion in free cash flow, which is a significant drop from the previous year. This was mainly due to higher net content investment and lower operating profits.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies and the company's future outlook. They repaid $0.9 billion of debt this quarter. How does this impact their financial health?
Repaying $0.9 billion of debt is a positive move, reducing their gross debt to $40.7 billion and maintaining a cash balance of $3.5 billion. Their net leverage stands at 4.2x, which is manageable. Additionally, the increase in DTC subscribers to 110.5 million, the largest quarterly growth since the launch of Max, is a strong indicator of future revenue potential.
What are the strategic initiatives that Warner Bros. Discovery is focusing on?
The company is heavily investing in its DTC segment, with a focus on expanding its subscriber base and enhancing content offerings. The recent launch of Max in Latin America and Europe is part of this strategy, aiming to capture more international markets.
Segment performance and strategic initiatives. Let's delve into the segment performance. How did the different segments fare this quarter?
The studios segment saw a 17% decrease in revenue, largely due to weaker box office performance compared to last year's hits like Barbie. However, the network segment reported a 3% increase in revenue, driven by sub-licensing Olympic sports rights in Europe. The DTC segment showed a promising 9% revenue increase, thanks to subscriber growth and higher pricing.
And how did the Olympics impact their financials?
The broadcast of the Olympics in Europe negatively impacted the network's adjusted EBITDA by $65 million. Despite this, the overall strategic focus on content and subscriber growth remains strong.
Leadership insights and closing remarks. What insights did the company leadership provide regarding their future direction?
CEO David Zaslav emphasized the ongoing transformation and strategic partnerships, such as the one with Charter Communications, to enhance consumer experiences. The company is committed to achieving its 2025 direct-to-consumer objectives, with a strong focus on content investment and expansion.
Thank you, John, for your insights. To wrap up, Warner Bros. Discovery is navigating a challenging environment with strategic initiatives aimed at long-term growth.
Indeed, while there are hurdles, the company's focus on subscriber growth and content expansion positions it well for the future.
Key takeaways. In summary, Warner Bros. Discovery reported a mixed quarter with a revenue of $9.6 billion and net income of $0.1 billion. The increase in DTC subscribers to 110.5 million and the repayment of $0.9 billion in debt are positive signs. Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on Warner Bros. Discovery's performance. See you next time.